It's tough, right?
So,
Trying to keep up with what's going on in the economy without, feeling like you're drowning in information.
right, yeah.
Well, today, we're going to do a deep dive into what BlackRock CEO Larry Fink had to say recently about, where he thinks things are headed.
Yeah, absolutely. And, he runs a huge firm, trillions of dollars, so it's definitely worth paying attention
Definitely.
to what he has to say. And, we're going to try to do that today. Look at, what he's saying about the economy, the stock market, and, what are his concerns and what that might mean, for us, everyday folks.
Okay, so let's dive in. One of the things that's, grabbed a lot of headlines was this idea, this suggestion from Fink that, we could see another 20% drop in the stock market. I mean, that's a pretty significant call coming from someone who's, overseeing trillions of dollars in assets.
Yeah, no, absolutely. And, it's really rooted in his view that we're already in a recession. Yeah. So, and what's interesting is, why he believes this. He points to conversations he's having with, lots of business leaders who share this sentiment. And he specifically calls out the airline industry as a kind of a telling indicator.
Oh, okay.
Reduced activity there often signals a broader economic slowdown.
So it's not just like a feeling, it's like he's seeing real world data.
Exactly.
Okay, so this perceived recession we're already in, quote unquote.
Yep.
It's not happening in a vacuum, right? Like he's tying this to the impact of, the tariffs that we're seeing and ongoing inflation.
Yeah.
Right. Like he's concerned that, these new tariffs are just going to push prices up even higher.
Yeah, exactly. And he sees these tariffs as adding to the already kind of strained labor market, right?
Sure.
So we've got, a shortage of workers in many industries.
Yeah.
And, his view is that it's going to create a scenario where inflation doesn't cool down.
Mm-hmm.
It could actually worsen beyond what we're currently expecting.
Mm-hmm.
So, his view is that the economy is weakening and these factors are just going to accelerate that.
So basically inflation is like the monster under the bed that just won't go away.
Yeah, that's a good way to put it.
Okay, so, and this, of course, directly impacts what he thinks the Federal Reserve is going to do, with interest rates, right?
Absolutely.
He's not exactly expecting them to, do all these multiple rate cuts that everyone's been talking about for 2025.
Yeah, no, that's a key difference. If you look at what the market is expecting versus what he's saying,
Right.
Fink is quite skeptical of significant rate cuts and anticipating that these underlying inflationary pressures are not going to subside as much as the market hopes. In fact, he even raises the possibility of inflation leading to higher interest rates.
Oh, wow.
Which would further, put the brakes on economic growth.
So it's almost like a double whammy, right? We've got this potential stock market drop. We're already in a recession, according to him.
Mm-hmm.
And we're not going to get these rate cuts that everybody's, hoping for.
Right.
So it's a pretty gloomy picture. However, he does offer a longer term view, right?
Yes, absolutely.
Where he suggests that, hey, this could actually be a buying opportunity.
Yeah.
So how do we reconcile those two things?
Yeah, that's a really important nuance. While he acknowledges the potential for, some short-term pain and volatility, his long-term outlook is optimistic.
Mm.
He frames this not as some kind of fundamental crisis, but as a phase, within the market cycle, suggesting that current conditions could actually be an opportunity for long-term investors.
Okay, so it's like short-term, buckle up.
Yeah, exactly.
Long-term, maybe there's some sunshine out there.
Yeah. And, it really highlights just how complex this economic picture is right now.
Right.
Potential short-term, headwinds, but a more, positive view looking further down the line.
So to sum all this up, Larry Fink, BlackRock CEO, he's signaling, caution in the near term. There's this potential weakness in the stock market. He thinks we're already in a recession. And he doesn't think the Fed's going to come to the rescue with a bunch of rate cuts because he thinks inflation is here to stay.
Yeah, that's a great summary.
So for all of you listening out there, here's something to chew on. Given, Fink's perspective on inflation and, this whole idea that we might not see, as many interest rate cuts as we were expecting, how does that change your thinking about your own long-term financial goals? How are you approaching the economy now? Definitely something to think about.
No, absolutely. It's definitely food for thought.
All right. Well, thanks for joining us on this deep dive. We'll catch you next time.
Sounds great.